Hello, everyone. Today I'm joined by Sonja Wells, the Executive Vice President and Chief Lending Officer for City First Bank, one of the largest Black-led banks in the country with over $1 billion in assets. How are you doing today, Sonja?
I'm doing great, Tony. Thank you. Glad to be here.
Thank you for joining. So
Sure.
recently there was a conversation that was held relating to Black developers and closing the wealth gap that the bank actually hosted. And I wanted to catch up with you and just have a conversation around that topic, get your thoughts and get your insights.
Okay.
All right. And one wanted to go into a piece of news that went viral sometime last year about the merger.
In urban communities.
Sorry?
I said it in urban communities. I said that was a really important conversation.
Yes.
Where we hosted that event. And, it's very interesting. If we don't partner with Black developers relative to their growth and expansion, increased capacity, and really providing them with access to capital for the projects that they're doing, particularly when you have developers that are committed to the communities that they grew up in many instances. It's really important for us to have that. It's an ongoing, really maintain an ongoing conversation with them about what their needs are, what they're experiencing, how we can help. And what they're experiencing in the in the banking community.
Right. Mm-hmm. And I'd like to rewind back a little bit to the merger between City First and Broadway.
That was yes, Broadway Federal.
Yes. Could you tell us, I guess, what prompted that and what the, response has been since then?
So what prompted that was it was a merger of equals. It was ability for us to continue to do what we're doing, what we were doing individually as banks on a larger scale, for us to really grow the geographic markets that we were in, for us to grow the products and services that we were offering, and really to increase the size check that we could write to those borrowers that we were serving and supporting those communities that we were committed to.
And what are the best ways in terms of banking that banks can help increase economic mobility in the Black community now that you've merged and you're a larger institution now? Mm-hmm. What are ways that you can help the economy or Black economies in the different neighborhoods and localities that you're in improve?
Yeah, so it's just really knowing and understanding those communities, what the needs are, partnering with those folks that are really committed to those communities, mm-hmm. And providing, capital, providing literacy support. All of those items are still very much needed in these communities, and that's what we're about. And so our merger has really enabled us to do what we do on a larger scale and to do it even better. So as a result, we can help with the increased mobility, from an economic perspective, not only for businesses, for the nonprofits that are servicing them, and both of us were commercial banks. So we don't do a lot of we really don't do any consumer lending, but we can still support the community and those organizations that are providing like financial literacy, talking about, wealth and, how we can provide legacy wealth and what that looks like. And we can still play a role in that.
Sure. And mm-hmm. Clearly, entrepreneurs need help, capital and resources and whatnot. What are some ways that banks can actually be empowered in order to better serve the community? Like, what are the needs that a bank would have?
Well, I think the biggest thing is, of course, the more liquidity we have, then the more capital we can deploy. So that's huge. So we have lots of institutional investors. We have, consumers that do invest in our bank, businesses that support minority-led banks and minority-owned institutions like ours, goes a long way. That support then allows us to continue to do what we do on a bigger and bigger scale in the long run.
Mm. And what are some ways that Black banks and Black real estate developers can come together to benefit the neighborhoods in which they reside?
I think the best way to do that, Tony, is by continued communication, partnership, really laying out what the needs are, not only for the community, but for the developers themselves, in terms of what they're experiencing, in terms of gaining access to capital, the projects that they're working on. And so bring this up to speed early on so that we can support them and provide them with the support that they need, either through capital deployment or to talk about, if there's how we can collectively partner with other financial institutions or other providers, both on the, like I said, from a banking perspective, as well as within the government community and
Sure.
those partnerships, because, obviously there are dollars and cents that are dedicated to these projects. We also have a nonprofit loan fund, that often is in receipt of capital magnet fund dollars, that allows us, so we can get creative in terms of putting together a package and structure that works to support the projects that the developers are working on. But it's helpful for us to have some advance notice so that we can talk about those things, so we know that's coming down the pike, so we can sit down and have the conversation and be creative.
Sure. And switching gears slightly, when it comes to owning commercial real estate for business owners, I wanted to get your thoughts on the importance of more entrepreneurs owning the physical commercial space where they do business.
I think that's extremely important. It just really makes for a stronger balance sheet and really gives them more flexibility and a lot more leverage down the road. So I think that, where possible, and, in all situations, it's not ideal, but, if the company, really knows the direction that it's going in, what the physical space needs are, and, and really do an analysis of rental versus ownership. I think oftentimes, I would say 9 times out of 10, you'll find that ownership is the better path, and something that should be done wherever, when, and wherever possible.
Would you
And
say,
it's challenging.
yes,
And it's challenging, Tony, I'll tell you. I mean, when you're talking about large urban communities, like Los Angeles and like Washington, D.C., space is hard to come by, and certainly reasonable space is hard to come by. Sometimes it's like, but, I would say that, entrepreneurs and business owners should be creative also, and sit down. And if you're working with a bank that really understands you and understands the community, you can talk, to them and help come up with a plan of action. It could be that, there's joint venture that's done, there's shared space, you can turn commercial space, not just, a single building, but taking a building where there's either expansion capability or maybe a little bit bigger than what you need, do a joint venture, and then condoize the space so that you can still have ownership, but you're sharing the space with folks that have similar needs.
right. What is the importance of having a relationship with your bank?
Oh, that's extremely important, Tony. There is no way that you can, as a business owner or even individually, that you should be, get to know your banker, know them before you need something, let them know what it is that, that you're doing, and what your plans are, what your expansion plans are, and make sure that that's the right bank for you. Make sure that they're willing to be supportive and that they have the products and services that are needed. And, and that they're of like mind, that they're interested in supporting, minority owners, because that's not always the case. And so you find that out sooner rather than later. Don't wait until you have a need and you all of a sudden find out that this is not the bank for you, and now you're scrambling.
Right. And a lot of business owners, I feel, aren't aware that that relationship should be developed, because they don't think that, I don't know, maybe they're not large enough or more important enough to start going to a bank and saying, hey, this is who I am and this is what I'm trying to do. How can we work together? Are there some ways that banks, or what ways is your bank like reaching out to the community saying, hey, this is what we're doing. What are you doing? Let's, work together or find a way to make something happen.
Yeah, so part of it is, part of that conversation is talk to your community, talk to other business owners and find out what they're doing, who they bank with, those that are already successful, that are already, already own their space and have borrowed and, have a relationship with the bank. That's a good start, is find out, who are your peers using for banks. A lot of folks think that just because you walk into a branch, that is the sole source of support that you can get from a financial institution. And of course, that's not the case. They're the smaller banks, you may have that the branch may be the sole source, but many times you have to think that there is a separation of duties between retail banking and commercial banking. And oftentimes, just like at our bank, we have the bank, and the branch, and we have a branch manager and we have an assistant branch manager, but then we've got a whole nother team of commercial lenders and relationship managers that work within, the business community. And although there is some partnership with the branch, they have to understand that there is a separation of duties, and that in addition to having the relationship with the retail branch side, there is the importance of having the relationship with the commercial side of the bank as well.
Interesting. So right now, the economy is, weathering a storm, and I guess preparing for something that may be a little even more interesting down the line. How would you say that has affected the lending industry, and how would you advise entrepreneurs to prepare themselves for this coming, I guess I don't want to be doom and gloom, but is it turmoil? Is it uncomfortable?
The word on the street is that there is a recession that is right around the corner. I think obviously all business owners have been impacted, by supply chain issues. They've been certainly impacted by inflation. Prices, are all over the place. There's some industries more than others. You're hearing every day that there's something new that someone can't get, or maybe something that you have always been able to purchase and it's been there and available, in multitudes. And now you're lucky if you can find one or two, or you're trying to figure it out and you're paying a lot more for it. So that's a given. So I think that, everyone has to plan for how do you, really tighten your belt and be, very careful about how you spend your money, where you spend your money, making sure that you're utilizing resources for those that, say, for example, are in import export, or that have co-manufacturers that they utilize, making sure that, there's planning and conversations being had about what this inflation, and what this, this current economic climate is going to do and how it's going to impact them. Are they going to see any substantial price increases? What does that look like? When are they going to occur? And, when, so that they can plan for it, so that they can budget accordingly, so that they can either, really talk about increasing prices. What is that going to look like for development projects? Are they going to have to scale back? Are they going to have to maybe do it in phases instead of doing it, as one large project? There's a number of different ways that I think that we're going to see impact. Obviously, rates are extraordinarily high at this point, for commercial dollars. So, in less than a year, you have seen where, rates were at all-time lows, and now rates are, really, they're really up there. And I'm not going to say all-time highs, because we have seen rates higher, but they have certainly increased, exponentially over the past 12 months, and they look very different. And so your buying power and what you're able to do are going to be impacted as a result.
Are banks being safer about their lending practices
Well, I think that, all banks are, regulated, and I think safety and soundness is key. And so I think that that has been, a given. We've been, kind of bracing for impact really since the pandemic began. And we're now starting to really see the impact, of, of the pandemic. I think that with PPP and some of the other supports that were put around certain industries, I just think that, overall, I mean, and so we had a lot of economic growth during that time frame that was unexpected, pleasant, but unexpected.
Right.
But that had a lot to do with, folks were, they weren't seeing, they were purchasing differently, they were doing differently. You think about remote work and all of these things that were happening that were totally different and than what we were used to seeing. And so now, all of a sudden, now that things are kind of normalizing again, what we're starting to see is, inflation, increased, pricing, we're seeing all sorts of economic factors that are coming into play now that's going to, require all of us to do things differently.
Right. One of the topics that we discussed on our first conversation was around the racial wealth gap. So
Yeah.
clearly you and I aren't going to solve that problem on this call.
No, I wish we could, Tony. I wish it were that simple. Unfortunately, you're talking about, we just recently participated in several conferences. One, we were talking about impact of climate change, on the, on business, on the environment. We've talked about, still that racial wealth gap. And what I will tell you is, those situations and those, the communities that have been impacted over the years are still being impacted. We're still trying to solve for something that, that reared its ugly head hundreds of years ago. And it's still going on. The racial wealth gap is not getting, it may, be improving for some. I'm not going to say that there's not been some improvement, but the challenges are still there. The gap is still there. And even if you have, those that have done extremely well, I think there's still a gap, there if you're a minority in comparison to, your majority population.
And so on a high level, very, very, very high level, what are maybe 2 or 3 areas that should be addressed in order to start closing this or addressing it in a meaningful way?
Well, I still think financial literacy, financial conversations is really important to have within the communities. I think access to capital and trying to figure out ways that we can deploy capital, more capital within the communities so that folks have access to what they need to do, either provide for their families or to, have access to the same real estate and the same opportunities that the majority has. And so I think that, I don't know, it's a really tough challenge, but I really think that continuing to, again, have the conversations about what the needs are, figuring out alternative methods of deploying capital, say, for example, when you think about, credit reporting, and what that looks like. If you have not been a property owner, if you don't have a commercial mortgage, and you have been a lifelong renter, well, your credit report is going to look very different than someone that has owned a home and has owned, real estate, for some time. So alternative methods of capital, coming up with alternative products and services that maybe help close the wealth gap somewhat. And those are challenges that, again, that as a banking community, we're communicating and talking about, as a CDFI community, which is, what City First is also a community development financial institution. We're talking as a collective and trying to figure out ways that, alternative methods of credit reporting, ways that we can deploy more capital and not have it be impacted by your standard algorithms and your standard method of credit assessment. overall.
Interesting.
Mhm.
Oh, Sonja, thank you so much for stopping by and taking the time to give your insight. I definitely enjoyed the conversation as always. Thanks again, and you have a great rest of the day.
Thank you, Tony. You do the same. All right. Take care. Have a good day.
You too. Take care.
Bye-bye.